Here is a question that the mainstream media is terrified to answer. Why is an ounce of silver worth $101 in New York, but the exact same ounce of silver is trading for $115 in Shanghai? In a normal global market, that shouldn't be possible. In a free market, traders would buy the cheap silver in New York, ship it to China, and pocket the profit until the price is matched. That is called arbitrage. It is the glue that holds the global financial system together. But today, that glue has dissolved. The arbitrage is broken, and the reason it is broken is the most dangerous geopolitical development of 2026. China has just dropped an economic nuke on the West. As of January 1st, they have officially choked off the supply of refined silver to the rest of the world. They aren't just hoarding it, they have reclassified it. To the Chinese Communist Party, silver is no longer a commodity. It is a strategic weapon. While you are debating whether silver is a good investment, the world's second-largest economy has already decided. They are draining the Western vaults, they are squeezing the COMEX dry, and they are preparing for a world where he who holds the metal makes the rules. If you are holding paper silver, you are in the blast radius. If you are holding physical, you are about to witness the greatest repricing event in history. Welcome back to the channel. Subscribe, hit the bell icon, and buckle up. Today, we are breaking down the China export ban that is about to send silver into the stratosphere. Let's start with the facts that Wall Street is ignoring. On January 1st, 2026, a new law quietly went into effect in Beijing. Most people missed it because they were hung over from New Year's Eve, but the industrial supply chain is already panicking. China has imposed strict export controls on refined silver. Now, you might be thinking, China mines a lot of silver, but they aren't the only ones. Mexico mines more. Peru mines more. Why does this matter? Here is the secret. Mining is only half the battle. You have to refine the ore into 0.999 fine bars for it to be useful for Apple, for Tesla, or for your investment stack. And guess who controls the refining? China refines between 60 and 70% of the world's silver. They are the bottleneck. They are the gatekeeper. And the gatekeeper just locked the door. Under the new rules, silver has been elevated to a strategic national resource, the same category used for rare earth elements. To export silver now, a company needs a special state-issued license. Do you know how many companies got that license? 44. That's it. And these aren't just any companies. These are state-controlled entities with strict quotas. This effectively cuts off the flow of silver from the east to the west. It is a silver curtain descending across the global economy. The message from Beijing is clear. We need this metal for our solar panels. We need it for our electric vehicles. We need it for our missiles. If you want silver, go find it somewhere else. But there is nowhere else. The Western refineries are already running at capacity. They cannot replace 60% of the global supply overnight. We are walking into a supply shock that makes the oil crisis of the 1970s look like a minor inconvenience. Why is China doing this now? It's not random. It is retaliation. For the last 3 years, the United States has been waging a chip war. We banned the export of advanced semiconductors to China. We tried to kneel on their tech sector to stop their military advancement. China didn't fire back with guns. They fired back with leverage. They looked at the periodic table of elements and asked, what does the West need that they cannot survive without? The answer is silver. You cannot build a Tomahawk missile without silver. You cannot build a fighter jet cockpit without silver. You cannot build a massive solar farm, which is the backbone of the West's green energy transition, without massive amounts of silver. By choking the supply, China is squeezing the U.S. military-industrial complex and the green energy agenda at the same time. It is a brilliant, ruthless move. They are prioritizing their domestic industry. China produces over 80% of the world's solar panels. They consume massive amounts of silver. In the past, they would export their surplus. Now,
There is no surplus. Every ounce mined in China and every ounce refined in China stays in China. This is what deglobalization looks like. It isn't just tariffs and trade deals. It is the physical hoarding of the building blocks of civilization. China is betting that in 2026, real assets matter more than fiat currency. They are trading paper yuan and paper dollars for physical silver. They are building a war chest of industrial commodities. And the price action proves it. Let's look at the numbers. This is where the arbitrage creates the squeeze. Right now, the spot price on the COMEX in New York is roughly $101 to $103. But if you look at the Shanghai Gold Exchange, or SGE, or the physical street price in China, silver is trading between $111 and $115. That is a premium of nearly 15%. In the financial world, a 1% spread is huge. A 15% spread is a broken market. Here's what's happening. Because silver is worth more in China, every loose ounce of silver on the planet is moving east. If you're a miner in Peru and New York offers you $101, but a Chinese buyer offers you $111, who do you sell to? You sell to China. This is creating a giant sucking sound. Western vaults are being drained. The LBNA in London is bleeding inventory. The COMEX is bleeding inventory. The metal is flowing one way, into the black hole of the Chinese market. And because of the export restrictions, once that silver enters China, it never leaves. It is a roach motel for precious metals. It goes in as a bar. It comes out as a solar panel or an EV battery. It never comes back to the COMEX to settle a short position. This is the nightmare scenario for the bullion banks. JP Morgan, Citicorp, HSBC, they're short silver on the COMEX. They have sold paper contracts promising to deliver metal, but the metal is gone. It's in Shanghai, and it's not coming back. The paper price of $101 is a ghost. It represents a market that has no inventory. The real price is $115 and rising. Eventually, the COMEX has to snap. You cannot maintain a fake price when the shelves are empty. We are watching the separation of paper silver and strategic silver. Paper silver is a gambling chip. Strategic silver is a matter of national security. Which one would you rather own?
So, how does this end? It ends in a failure to deliver. The COMEX works on confidence. Traders trust that if they stand for delivery, they will get their metal. But with China locking down 60% of the refined supply, the COMEX is running on fumes. We are already seeing signs of stress. Illegible inventory is not registered inventory. Just because there is silver in the vault doesn't mean it's for sale. The owners of that silver see the $115 price in Shanghai. They aren't going to sell it on the COMEX for $101. They are withdrawing it. This creates a liquidity crisis. The shorts are trapped. They need to cover, but there is no liquidity. When they try to buy, the price gaps up. And because the supply chain is broken by these export controls, high prices do not fix the shortage. Usually, high prices bring more supply. But if the Chinese government says no exports, it doesn't matter if silver goes to $200. The supply is legally blocked. This is a geopolitical squeeze. It is harder to break than a regular market squeeze. You can't print silver, and you can't force Xi Jinping to sign an export license. The West is realizing too late that they outsourced their entire industrial base to their biggest rival. We outsourced the mining, we outsourced the refining, we outsourced the inventory, and now the landlord has changed the locks. What does this mean for you, the individual investor? It means the window to buy physical silver at Western prices is closing. The $101 price you see on your screen is a temporary gift. It is a lag. It is the time it takes for the reality of the shortage to travel from Shanghai to New York. When that lag catches up, it will be violent. We could see silver gap from $103 to $120 overnight. We could see premiums on silver eagles and bars explode to 50% or more. Why? because dealers won't be able to restock. If the Chinese refiners aren't exporting, where does your local coin shop get their monster boxes? They get them from the secondary market. They have to buy them from you, and they will have to pay a massive premium to convince you to sell. We are moving into a world of resource nationalism. Countries are hoarding what they have. If nations are hoarding silver, shouldn't you? China sees silver as a strategic asset essential for the future. Wall Street sees silver as a ticker symbol to trade for fiat profits. Who do you think is going to win this decade? The country building the infrastructure of the future, or the bankers trading paper? I'm betting on the physical. I'm betting on the strategic asset. Don't wait until the export ban makes headlines on CNN. By then, the sold-out signs will be up. The decoupling is here. The East is going its own way. Make sure you have your wealth in your own hands before the paper market realizes it's holding an empty bag. If this video helped you understand the gravity of the China situation, smash that like button. Share this with everyone who thinks the silver squeeze is a conspiracy theory. It's not a theory. It's geopolitical policy. Subscribe to the channel. We are tracking the Shanghai premium every single day. Comment below. Do you think the U.S. government will intervene and ban silver exports too? Yes or no? Stay sharp, stay stacked, and I'll see you in the next one.